Okay, I'd like to respond to Chris Duane's challenge to the crypto community. He covers himself by saying he doesn't care what you do with your money, but it's fairly clear his premise is that you shouldn't own any cryptocurrency and should be heavily or fully invested in silver, preferably his company's silver coins. Chris starts off by saying not to take any of his comments personally, but then goes on to refer to crypto advocates as kids and to himself as a responsible adult. Later in the video, he says that liberty-minded crypto advocates have sold their integrity, soul, and subscribership to make a quick and greedy buck. They are giant hypocrites. Not exactly an objective discussion of the facts. I'll take his caveat and not take it personally. That said, I'm not going to treat him with kid gloves either. Chris states that Bitcoin is nothing but a string of code, and thus has no intrinsic value. Is he actually saying that no computer protocol or software has value because it's only computer code? In truth, it's the physical infrastructure built around a computer protocol or software and general acceptance that gives it its value. Consider Microsoft Word. Bill Gates can show you 90 billion reasons why it has value, but I'll be happy to explain it. Microsoft Word has become the generally accepted standard in word processing software. Just like Bitcoin, it has plenty of competition that in some ways is superior. But once you're that standard, it doesn't matter. Have you heard of Pages? No, me either, not before checking for this video. Pages is Apple's word processing program. My wife loves Apple and would certainly use Pages, but unfortunately, no one else does. So she had to pay to install Word on her MacBook, even though it already had Pages installed. Bitcoin has a similar advantage over other cryptocurrency, and I can give you a simple example. On the Bitcoin exchange Poloniex, they offer a wonderful, free market margin trading service. You can lend your cryptocurrency to others to margin trade with. Interest rates are calculated daily, but if rolled over, Bitcoin would have paid a lender over 50% last year. You can lend your other cryptocurrencies, but would have earned next to nothing over the past year. Why does Bitcoin have so much more lending value? It's because Bitcoin is the numeraire, the standard upon which all other cryptocurrencies are traded against. Physical infrastructure, systems, standards, innovation, and even trust are being built upon and around Bitcoin and other top cryptos, and this is why they have value, and is what differentiates them from the hundreds of nearly worthless cryptocurrencies out there. Are you buying precious metals or cryptocurrency because of the threat of major economic shock? If you are, it may be a good idea to understand how assets in your crisis portfolio have reacted to minor economic shocks. Bitcoin's price went up during the Cyprus bail-in, the Greek crisis, the Russian ruble crisis, and Chinese capital controls in the beginning of 2016. In the summer of 2016, it had a similar reaction to Brexit, and an even more profound reaction to the Indian banknote demonetization and resulting chaos. The latest run-up was helped out by continued Chinese capital controls. Chris also starts off by requesting that no one should retort with the performance of cryptocurrencies. This is not what I'm showing above. It could have been overall flat over that time or even down. I was simply pointing out that it has gone up during times of turmoil, regardless of overall performance. What is shocking is while he doesn't want you to throw the meteoric rise in his face, he notes the recent pullback in Bitcoin, which is reversed at the time of this transcript. He also talks an awful lot about the price of his silver products. Which is it, Chris? Do you want to discuss the performance and price or not? Chris states that he is a fan of blockchain, and I think Andreas Antonopoulos parodied this best, so I'll let him explain it.
Moving to bargaining. So now the new line is, well, the blockchain technology is really promising. But Bitcoin, the currency, that's just weird and volatile and you don't want to touch that, right? So we're splitting hairs. This is the third stage of grief, bargaining. And this is becoming the meme of 2015, because now a lot of companies are trying to do this triangulation, trying to split hairs, trying to say, well, we'll take a bit of blockchain, but you can leave that Bitcoin stuff behind. Have you started a Bitcoin research group? Oh, no, we don't do that stuff. We've got a blockchain research group in our bank. And we're studying blockchain technology, so we're bargaining. And this is really hilarious because the first thing it reveals is that they don't really understand Bitcoin. You can't just cleave off the blockchain technology and say, oh yeah, this is revolutionary, because it's not. Blockchain on its own is not revolutionary. What do I mean by that? Because some of you are looking at me funny at this point. Why am I saying that the blockchain is not revolutionary? Because the blockchain is a ledger. Blockchain is a ledger. How old are ledgers? Thousands of years old. In fact, the very first writing that we have discovered around the world, on tablets, on stone, on papyrus, are ledgers. So if you have a page of papyrus, the very first page ever created, what do you write on it? You write how many goats your neighbor owns you, right? Or how many vats of wine you sold to someone, and that's a ledger. There's nothing revolutionary about this technology. Now, if you summed up all of the vats of wine on the first page of papyrus, and then you copied that number to the top of the second page of papyrus, now you're linking together these blocks of transactions. Well, that's a blockchain. And it's not really interesting technology. It's been around for ages. What's really interesting is a decentralized blockchain. Now that is fascinating. A decentralized blockchain with no central authority. A decentralized blockchain that does not have a counterparty responsible for recording information on that decentralized blockchain. That is astonishingly disruptive and revolutionary technology. That changes so many industries. But that's not what they're researching in the blockchain research department of the big bank. What they're researching is ledgers. And what they're trying to do with these ledgers is say, well, we kind of like this blockchain idea, but can we do it without any of the mining and the decentralization and the open protocols and open access APIs and all of that anarchic chaos, everybody gets to be a bank crap? Can we just get a blockchain more like Visa?
Chris is trying to avoid looking like he's against technology and progress, but his logic fails, particularly if he's anti-collectivism. I fully understand someone who has a strong belief in a certain investment starting a business around that investment, as Chris has with silver. He is also entitled to his opinion, but he has such a conflict of interest, both conscious and subconscious, when discussing two assets competing for a similar market share, that it's difficult to take him seriously. Consider if you were going to buy a truck. I'm the guy who simply owns a Ford and a Chevy, giving you an opinion of the pros and cons of both. Chris is the Ford dealer, not only telling you Ford is better, but to sell any GM product you own and quickly buy a Ford Super Duty from him. Would you really consider the dealer's advice unbiased? I have to say it is impressive that Mike Maloney, a precious metals dealer, suggesting owning some crypto, even though it could hurt his business. That's how you build trust. If there is a clear conflict of interest, it's best, using a topical word, to recuse yourself. If there is a major economic crisis, maintaining a clear mind and strong mental health will be essential. The truth is, we don't know how Bitcoin or precious metals are going to fare during the economic crisis that's likely to occur. We'll say your crisis portfolio stays fully invested in silver, even though over and over you considered purchasing cryptocurrency. And what if cryptocurrency ends up being a far superior protection in the coming collapse? I have formed a crisis portfolio with thousands of ounces of silver, but also cryptocurrency. I've put much more money into precious metals than crypto, but I didn't start to test the waters in this new market until 2015, when I started to invest a small amount of my money into cryptocurrency. If I lose it all at some point, I can certainly live with that. But I would have a hard time if the collapse comes, and I had ignored my gut and brain telling me a little diversification is a good idea. Unlike the advice of many financial advisors, zero is not the correct allocation to precious metals considering our current economic predicament, nor is zero the correct allocation to cryptocurrency. Also, consider your timeline. The timeline for my crisis portfolio is not time-based, it's event-based. Its performance should be judged from now until a few weeks to a few years following a major economic crisis. Absent a crisis, I'm not concerned over the short-term price movements, and I certainly don't care about its performance once I'm dead. Throughout Chris's rant, he states things that are his beliefs, but acts as if they are facts over and over. Heck, I've done a video going over the circumstantial evidence that Bitcoin may have been developed by those with government involvement. But the key phrase there is circumstantial evidence. I don't know who developed Bitcoin, or what their motivations were, and neither does Chris Duane. He speaks of the arrogance and youthful hubris of crypto advocates, but shows no humility himself. Chris said that he's lived long enough to see many forms of the same illusion, if chased too long, ruins lives. But in a previous video, he talked about a man, much older than he, who had spent over 30 years investing in silver, and relative to other assets during that time, he never profited. He warned Chris not to make the same mistake. Chris promptly disregards his advice. Chris even stated he doesn't care if Bitcoin goes to $1 million. I suppose he also doesn't care if silver stays flat over the same time period. Will you care? He speaks with far too much certainty than one should in an uncertain world to be trusted molding your investment philosophy. I'm quite happy owning both silver and Bitcoin. I believe precious metals and cryptocurrency are great partners in a crisis portfolio, although investors shouldn't invest any more than they are willing to lose into Bitcoin and other cryptocurrency. I have no problem with Chris, or anyone else for that matter, putting all their eggs in one basket. That said, I do have a problem with someone who's trying to push viewers in a direction that could be psychologically damaging if trends continue. I still believe in precious metals, but I think crypto is setting itself up to do exceptionally well should the economic big one hit. But enough about opinion. I say put your money where your mouth is. Let's agree on what the results of a collapse could be. A US federal default, the S&P 500 getting cut in half, 8% inflation prints for over a year, whatever. He defines his crisis portfolio, and I'll define mine. If his portfolio wins, I'll give him 100 ounces of silver, or 6/10 of a Bitcoin, and vice versa. Winner's choice. Put it in writing and I'll sign.